All right, what's going on? Today is I am the Big 44. All right, today is 11/27, 2004, one day before Thanksgiving. All right, so here's the biggest thing. We're going to go over this. The one thing that changed my trading altogether went from trading the smaller time frames, the 5 minute time frame, the 1 minute time frame, 15 minute time frame, the 1 hour, the 4 hour. Shoot, I was even looking at the 3 months and the 12 months at one point. I was trying to find everything to find that exclusive edge that I needed. But what we're going to do now today, and we're not going to take too much of your time, but the reason why I say this transformed my life as far as trading wise is I've learned patience. Patience in this market. I believe one of the greatest investors of all time, or the greatest trader investor, it says the market is to take money from to transfer money from the patient, from the impatient to the patient. All right. So if you've been following me for a while, you already know that I actually trade the daily time frame. And before we move on, if you've seen any of my other videos and you like the content, make sure you smash that like button and hit the subscribe button and hit the bell for notifications, because I will beat the dead horse every time we come on until you guys are profitable. And the thing about this is it's not a get rich overnight. If you have, I always preach, if you have that 9 to 5, if you have something else going on that's bringing in your income, make sure you do not quit that job, or you get to quit that income that's coming in while you're learning this skill. All right, let's move on real quick. I'm not going to do my 10-minute rant today. All right, so what we're going to do is we have this chart, right? We're going to break it down. If this is your first time, then we're going to go back over it again. And the reason why I continue to go back over this thing over and over and over and over is so that way you like, you know what? I might have missed something this time. All right, so if you look at it, I have my trade. So we're gonna do EU. All right, now this right here is my the beginning of the year. All right, let's just do January 2024. All right, that's the beginning of the year. All right, so what we're gonna do is you're gonna go up to indicators, right? All right, you're gonna go over the indicators, and then simple moving average. You can just type in SMA, and it'll come up. As you can see, it's by stocks and box. Boom. All right, a lot of trash is up there. All right, and then you can just type in ATR. We'll worry about that trash here in a second, and type that in. So we're gonna go to ATR first, down at the bottom. If you see this little cog wheel down here at the bottom, all right, click it. It's gonna come up as import a style. What we're gonna do is we're gonna do the the 14 period ATR, and I'll just put smoothing. You can do the 5 or the 14, it don't matter. All right, that's something you need to play with. I know 14 has a closer stop loss and the 5 has a wider stop loss. All right, and we put chart, wait for time frame to close, style. You can put yellow, you can put whatever color you want. All right, it doesn't matter. All right, and we click out of that. So then we go up to the cogwheel on SMA, right? All right, as you can see, has 1 through 10. We don't need all those. We just need SMA 1. All right, we go to here, type of yellow, the thickness. I just like yellow. All right, then do the thickness. All right, then we will uncheck all these other boxes. We don't need them. We don't need them. All right, uncheck all these other boxes. All right. Matter of fact, and I'm going to change this back to the color. Let's make it. Just make it green. Make it a little. Let's make it blue. All right. Oh, we still got one up there that we need to take off. Which one? All right, number 10. All right, if you look at it. All right, so this is what we look at. Let me do this for you. Let me go up and down, get rid of that. All right. And let's go over here. 1. Daily. All right, so we look for the bias, meaning uptrend, downtrend, or consolidation. All right, that's what we're looking for right now. All right, and let me make this smaller. All right, consolidation, meaning we look for the bias, meaning if we trading daily time frame, we will look at the weekly and monthly. All right, so the monthly doesn't come into play so much, but it gives us that A plus. All right, let me just type in A plus. All right, set up if the monthly is also the same bias as the daily. And make sure you write all this, screenshot this and weekly. All right. Oops. All right, number 2. Hope that wasn't a lot for number 2. So number 1, look for the bias, uptrend, downtrend, consolidation. And if we trade in the daily time frame, not if. Since we trade in the daily time frame, we will look at the weekly and the monthly. A plus setups if the monthly is also the same bias as the daily and weekly. All right. So that's the first thing we look for. We look for trend confirmation from all 3. If we have 2, the daily and the weekly, we're fine. All right. We're good to go. All right. But if we have daily, weekly, and monthly, all bearish or all bullish, A plus setup. Now we're just going to look for the entry. All right. So number 2, all right, cross of the 20 SMA. The cross of the 20 SMA. All right, that's the first thing we look for. Look for the cross of the 20 SMA. And what else comes with that is, okay, now we look for 2 candle lows for lows. And I explain to this more in detail. 2 candle lows for buy, 2 candle highs for a sell. All right. And I will explain this more in a second. All right. Once we see our 2 candle lows or 2 candle highs, all right, we will take the trade and place TP/SL. So we can do this 1 or 2 ways. I'm gonna be honest with you. We can do 1 or 2 ways. We can do 1 for 1. I normally do 1 for 1 because I do more than 1 pair in the month. So I don't need to go 1 and 5, 1 and 2. I can go 1 for 1 for each one. But I give myself a little bit of breathing room to it. So we'll look at 1.5 times 5 period SMA. All right, I'll explain that more too as well, okay, for a good trade we had right there. And then from right there, all right, we look, once we place the trade, right, all right, from there, we monitor the trade 1 time a day at the candle closing, which is my time. I'm gonna just write my time, 5 p.m. Central Standard Time. All right, you figure out what time that is for you. All right, so make sure you copy this down. So again, we're gonna look at the bias, the uptrend, the downtrend, or consolidation. And since we're trading in the daily time frame, we will look for the weekly, the monthly, and the A plus setup. All right, setups for the monthly, and it's also the same bias. It is A plus setup. I'm sorry, if the monthly is also the same bias as the daily and the weekly. All right, then we also look at the cross of the 20 SMA. This is a pretty simple strategy, guys. All right, and the reason why it's a higher win rate, you do your own back testing, because what my eyes see is not what yours eyes see. The reason why it's a good win rate is due to the fact that it takes a little, the price action is a little more deliberate on the daily and the weekly. So you don't have to worry about the 5-minute time frame and going down, coming back up, going back down, or consolidating. and you're not, you're getting small pips here and there. All right, especially if you have a daily, if you have a job, it's kind of hard to trade the New York session or the London session while you're trying to do stuff at work. All right, we look for 2 candle lows. That's for a buy, and 2 candle highs for a sell. We also take the trade. We will take the trade and place the TP and the SL 1.5 times your 5-period moving average. We monitor the trade 1 time a day at the candle closing. All right, you will make sure. All right, let me go to number 6. Proper risk management is key. It is key, ladies and gentlemen. Risk management is key. All right, so if you look at this, let's. All right, I'm gonna give you a few seconds. Make sure you pause, screenshot that, and we're gonna move right along. All right, let's move this out the way. And if you look right here, this is what I like to do. I'm gonna be honest with you. I'll show you here in a second. I'm gonna show you in a second. I like to every month. I like to use this. All right, this is my November. Oh, let me see if I spelled that right. November trading month down there. All right. So if you look, so we looked on, and then what I like to do is for the monthly, and especially at the beginning of the month, right? So this was, all right, this is October. So this is October high. All right, and this is October low. All right, go to daily time frame. All right, as you can see, this was the price right here, right? Let me go over here and find my price tools. Where's my price? Where's my handy dandy price tools at? Hold on. Let me see. Let's see. Price labels. No, price notes. Here we go. All right, so it closed. The low of the previous month was 1.0746. All right, the high. All right, so you can see it's crossed the 20 SMA. All right, so it's crossed in October, but now it retraced and it came over and it went back down again. So let's look at the first one. Crossed the 20 SMA. It did cross. And what I like to do is, and let's go back. What I like to do is, all right, you see on the 6th of November, all right, it broke through. All right, but we want the candle to completely not touch. Candle must not touch the SMA. All right. 2 candles must not cross the not touch. Must not touch the SMA at all. So all right, you can see, all right, it touched right here. So no. All right, let's move. So no. All right. So let's move on to the next one. Okay. So we have one. So what I do right here, look, November 7th, nothing on this pair. Now keep in mind, we're looking at 30 plus pairs. So I'll mark this off. Boom. All right. Here's another one. All right, boom. And all right, so what I do from here, all right, cross the SMA, we look for the 2 candle lows. So this is a 2 candle high, all right, for a sale. The reason why I say 2 candle high is because it's the high point of once it breaks through, it's not a low, it's a high to me. That's just something I say. All right, you can say whatever you want to do. So if you look right here, 2 candle lows, it's at the low. All right, this is at the high. All right. All right, so then we look for right here. So what we do, we also go back. We got to make sure the daily, the monthly, the daily and the weekly coincide with each other. So basically, I want them both for a good setup to be bearish. I can't have my daily bearish, all right, and then my weekly bullish. It's just not going to work out. All right, they're going in 2 different directions. But if I'm looking for a sell setup and I'm looking for a bearish setup, if the daily, the weekly, and the monthly is all bearish, all we have to do is find the proper entry. And that's what we're doing right now. All right. All right, we will take the trade based off the the TP and the SL 1.5 times the 5-period moving average. All right, so what we're gonna do is here. All right, let me bring this up. Let me bring this up. All right. Let's see. Let me stop the screen real quick and let me bring this up. Share screen and tag screen so you can see this whole thing. All right, and bring to the stage. All right, so pretty simple. It's not hard math. If you look right here, if you look for at my SMA or my ATR, keep in mind if you have this up, this indicator needs to come down. That's otherwise you won't see the number. Bring this down. See if you see on the top left. All right, my indicator is right here, but you bring it down, then this automatically populates. If you bring the horizontal line, like my horizontal line right here, over it, and if you look to the bottom left, that is 83. All right, 83. All right, if I like 83, being honest, most of the time I do 1 for 1, so I'll do 83. But if you look, if I have that A plus set up and all three time frames are going the same direction, then I'll do the 1.5. All right, so if you look, this is 83. And let's just do both so I can show you. All right, that's 830. All right, and 830. All right, now let's do this one. All right, then let's look at 1.5. See, 1.5 times the 5-period moving average, which is 83. All right, 124. All right, and then you come up here, 124. Now here's the thing. Your risk is going to be 83 pips, right? So you can go 1 for 1. I do that because I have more than one pair I trade. But also, when you monitor the trade, if you get to your TP of 83, then you can move your stop loss in the profit to, you can move it to break even. So that way it's a risk-free trade now. You know what I'm saying? If it does reverse on you. All right. So if you look at, let's move this over. All right. What was this? 124. All right. So let's do, why is it at 300K? Let's just do, all right, 0.5. All right. So from right here, 336, and down here, about 600. All right. Then we're going to go. Let's move this out the way and continue to go. All right, so you can see it's hit our 83 pips. All right, now keep in mind, we had to wait till the 11th of November for this trade. So that is the biggest key. I know you're going to sit here and like, oh, this is easy, man. That strategy, I'm going to try it out. It's so easy. I'm going to be making a lot of money. Here's the kicker for that, right? The kicker is time, patience, time, patience. I promise you, the time and the patience, if you're not ready for this daily time frame, will kick your butt because you're going to be like, man, I'm missing out. Man, I'm looking at the chart. I want this, man. I need this money now. I can promise you, if you don't have a job and you want to make money through this way, the best thing to do is just not quit your day job, right, and don't go all in on this right now. Because if you don't have $100 to your name and that's the last thing you got, then I would suggest continue to work. All right. I hope I didn't ramble on that one. All right. Here we go. Look at that. So with patience, all right, it broke through on the 6th of November. All right. So if you look right here, all right, November 1st. All right, that's 4 days, 5 days, 6 days. All right, 7 days, 8 days, 10 days, 10, 11 days right here. So in 11 days, all right, 11 days or so, all right, we're looking at that. That's how long we had to take a break from the trading market. If we was just only trading EU, then you wouldn't get a trade every month. I can promise you that one. Or you might get some losing ones. That's why we trade more. But as you can see, this the 1-to-1 hit, right? And the one to the one. I'm sorry. Hold on. Let me see. Always keep that one. So that's 1 to 1.8. All right. So 830. Always keep that. Even when you do the 1 point, so even if you do the 1.5, 124, that'll be your TP. That won't be your stop loss. Your stop loss is your ATR. You want to keep that stop loss because that keeps you from when you're doing one-to-ones, or that keeps you from risking too much. All right. You can see it hit the 1 to 1 1.49 and the 1-to-1. Pretty simple. But if you jump in on the trade on the 11th, it took about 3 to 4 days. All right, 3 to 4 days. All right, got it. All right, let's continue on. It is almost the end of the month, the 27th. As you can see, it continued on. All right, and this is what I mean by monitoring your trade. So when I tell you about monitoring the trade, is you can switch it over. All right, switch over to Heiken Ashi. All right. And the reason why I say switch over to Heiken Ashi, right, is because look at this. All right. So this keeps you in the market. All right. You can see right here, came back down red. Our strategy red. It kept us for those 3 or 4 days, not worrying about, oh man, is it gonna go against me? Blah, blah, blah. All right. So once you see this green one, you get out. I'm gonna be honest with you. You see the green one, get out. Or if you see that thing completely turn this way, that's when you get out. But me personally, I get out right there and I look for a different pair. All right. I look for a different pair. Even yes, I know it went down, but I do 1-to-ones, or I do 1.5 times the 5-period ATR. All right. Hope that made a lot of sense for you guys today. Just make sure. Here's the thing. Here's the thing. All right. I always draw the previous month highs and lows every single month. All right. If you look at it right here, let's just go through this up to GJ. All right. Up to GJ. And I'll show you the one. So if you look, 2 candle lows. All right. We did a 1-to-1. All right. What was this? Hold on. 57. All right. Let's move to the next one. Let's move to the next one. All right. I must erase this one. So let's look at November trading month. Let's go back. So, all right, look at this. This was around the 12th. All right, you see what I'm saying? So that first month, that first part of the month, we was hanging tight. We didn't get no trades. All right, look at that. 103. 103. And let's see if we did the 1-for-1. The 1.5. Let's do 1.5 times 101. 1.5 times 103. All right. So this is our 1-to-1, 103. And then let's look at, and that's we keep the 103. So we're gonna keep the ATR. All right, and 154. All right. Boom. You see that? Right there, that entry point. Same thing. See? That risk was 1.5. All right, let's move to the next one. All right, as you can see right here, look, broke through on the 11th, went through on the 12th. All right, got out 149 pips. I'm gonna be honest with you, the JPY pairs this year have been working with this strategy really well. All right, because it moves fast. So just keep in mind, all the JPYs move pretty fast. So you got to make sure you monitor them at least once a day. All right, because it can't go against you. All right. If you look right here, this was the 11th of the month. That's that second week. All right. A lot of news comes out the first week. The second week, we start getting some movement. All right. Here we go. I don't think this was nothing this month. Hold on. Oh yeah, it was. I'm sorry. And it was right here, 2 candle highs. We got that 2 candle highs right here. We're going to do a 1 for 1. And let's see. Why does it keep doing that? All right. 65. 65. 65. And let's see if we would have got our 1.5 times 65. 97. 97. All right, and 650. Okay, so we would have had to wait a little bit longer for the 1.5, right? But we got that 1 for 1 2 days later, right? 2 days later. But for 1 for 1, I mean 1.5, we got in on the 12th, and it took us out today, which was about 2 weeks. All right, about 2 weeks. So that's where I say you got to have patience, because look, it came back and closed, and it doesn't matter what happens. Honestly, once you have your risk in place, it doesn't matter the price action that happens during the day, because you could actually look at this candle. It actually was going up, looked like it was about to break through the SMA, and look what happened. Came right back down and closed out in still in profit. All right, look at this right here. It came up, came into the loss section, boom, came back, and now we're in profit. It closed out at 65006. All right. See what I mean? All right. This one happened on, and this month in November was good for a lot of the pairs. Reason being is especially USD pairs, because of the simple fact that the election was this month. All right, if you can see right here. All right, 59. All right, boom. So you actually would have lost. Let me hold on. Let me double check. 59. Let me see. 1.5 times 59. 88. Let's see. Let me move this over. And let me do another one. 88. Let me see here. 59. All right. So yes, you would. It depends. Yeah. It depends on where you got in at, where your broker got you in at. It's cutting it close, but you can see both of these trades actually hit, because if it didn't hit right here, it would have hit right here. This was red, then it popped back up to some buying pressure. All right, so this one, now keep in mind, these three, I always write this too. All right, here we go. And USD CAD, 11th to the 12th of the month. All right, look at that, 65, 65. And let's look at 1.5. All right, 1.5 times 65, 97. So 65, 97. All right, we 1.5, and the 1 for 1 and the 1.5 worked this month. Boom. All right, let's move to the next pair. All right, and we can just keep going on and on. All right, look at all these pairs that hit the 1.5. All right, and let's go to the next one. All right, let's go to the next one. Let me show you one that we actually lost for the month. All right, and where was it at? Let me see. This one. All right, the beginning of the month. See this? So if you look right here, this was the 6th and 7th of the month. And should we have taken this trade? Probably not, because of the simple fact, if we just looked left, and let me go back, let me go to the previous month. All right, let's get rid of all this. All right. All right, so the previous month, right? Let's mark up highs. Let's mark up lows. All right, that's the previous month. Go down to the daily, and we're gonna mark off where we at. All right, November trading month. All right, here we go. And if you look, should we have taken this trade? Probably not. Reason being is because October high, which is the previous month high. All right, so if we see that, we didn't see no inclination of that breaking this price of 199,975. All right, so I don't know why we took this trade, because even with that being said, you still have to look at support and resistance. Still have to look at support and resistance. That is key, because if this was last month's high, right, it has to give some kind. It don't have to, but that's why we end up losing this trade. We was looking at some more support, but if you look at it, this was bounced off, boom, came back, bounced off again. But guess what? We lost that trade, and guess what happens? Here comes good old handy dandy trade again. Let's look at let's just do 1-for-1 right now. 188. And the read, like I say, 188 for me is key because we trade over 30 plus pairs. All right, so I don't need to go 1-to-5s with everything, because we get our money's worth with 1-to-1s. Okay, 188 right there. All right, it goes one right here, and let's go. Let's do this again. Let's go the monthly time frame. All right, let's look. High, low. All right. Oh, so yeah, it broke through, but we still should have still been weary, because that's last month's high. 1, 2, 3, and it broke down. And so now look right here, we shouldn't even count at this one, because this one is pretty much touching the SMA. But we learn now. We learn if we see it right here, boom, it happens. We're gonna take some losses, so we'll take that one. We lost this one right here. All right, but look what it's about to start doing. All right, we have our setup again right here. This is our first candle. The market will be open tonight, so and it closed again. So we'll see if this candle closes bullish. I mean, a bearish, and then we'll look at the higher time frame. So you can see, look, all right, the week we got to look. It's starting to be a little bearish. All right, more consolidation, but let's move on. All right, so if you look, this is all my pairs right here, right? So if I open my list, I look at all my pairs. It's 32 pairs. So what I do is, if you notice, all right, these are all my leftover pairs that I have to look at, and I have it just spaced out the way I do. I look for setups on here. If I've lost on the pair, I can double check and look, recount it, and look again. I have my potentials right here. It's like, okay, I see right here, look, I see a 1 candle low. All right, now I wait for this to close. I see a 1 candle low, that's in my potential. I see here goes the 2 candle high. I mean, 2 candle high, 2 candle high. The JPY pairs look like they're gonna give me some love coming in December, at the first part of the middle part of December. All right, but all these, once I get my what I'm looking for, once I get all my, I win the trade, I put it in the green, and it's off limits for the rest of the month. That's just the way I do it, because I don't double tap a trade once I'm already won. All right, and that's pretty much what I look at. All right, so with that being said, all right, let's just not forget that, the indicators don't make it 100%. You still got to read the news and understand what GBP is, and the FOMC and all that good stuff. All right, but down the line. So trust me, I've tried every method under the sun, from technical analysis. I've done some fundamentals from trading, day trading to swing trading, you name it, I've tried it. But no matter how hard I tried, I just couldn't get that edge. And the thing about it is, if you have an edge, to me, it's risk management is always going to be key. Always going to be key. And I remember, and I always go off the method of KISS method, KISS. Keep it simple, stupid. If you look at this chart, right? If you look at this chart, if you catch yourself, and let's just add, this right here. Let's just add a few of them. Let's go add a few. All right, I don't have the bigger thing, so I can't add that many. But if you look at it, you don't need all this. All right, you don't need a million indicators. All right, let's get this over here. Let's get that over here. Let's get that over here. This is what you need. All right, two, at the most, two indicators. And if you just sit back and look, you can see which way it's trying to go. All right, it just takes time and patience. All right, look at this. Let's just go back right here. This was July. Look at this. It's telling, if you just sit back, right, it's telling you where it wants to go. It's on the daily time frame. Each candle is a day, 24 hours. You know what I'm saying? All right, but keep it simple, stupid. Other than that, you guys have a good Thanksgiving or a good rest of your holidays. All gas, no brakes.